Hey everybody, David Skrika. So I'm going to do a very short stock chart of the day today. And part of the reason is I just did this hour-long interview. So something to kind of maybe watch over the weekend here. And that's why I didn't have a stock chart of the day on Thursday, because I was doing I did this interview, I think, on Wednesday. That's why I didn't have one Wednesday. And then I was finishing off an article. I write for something called Financial Intelligence Report, and I've been pretty good about getting my articles in early. So what it is, like, my May article has to be in by the end of March, beginning of April. So I'm pretty good about getting these articles in a week or two early. So I was working on that all day Thursday, and then Wednesday I did this hour-long interview. And it may not seem like, but when you do an interview like this, you kind of get a little burnt out. So anyhow, so long story short, I got it one Friday. I'll do a stock chart of the week this weekend, but like, this will give you something to listen to because it's an hour long. A few of my long-term subscribers, I got someone I've known for 15, 16 years now. He basically told me that this was one of the best interviews I've ever done. It's getting pretty good views, 7,000. I consider myself a nobody in this industry, but it's always nice to see that. Anyhow, we'd like to do this. I'd like to talk about it. Anyway, I talk about everything from, that this recent thing I've talked about, the debt coming on the market, et cetera, et cetera. So that's what it kind of looks at. So I'm going to embed it below this video. So I want to keep this video short. So with today's video, we're going to look at, the central bank, sort of came in very dovish, and we're seeing the market actually sell off today, a few days afterwards. But I just want to go out to December. I don't want to show every single meeting. So it does look like by December, there's basically an 80% chance that there'll be 3 interest rate cuts. So that's kind of confirmed it. And the question we have to ask ourselves is, why were they dovish, right? Were they dovish because of what I was talking about, right? Were they dovish because they see now that all this debt is going to hit the market, and they kind of know they have to raise, cut interest rates. And we can still see the 2-year bond is still actually up, about 40 basis points from the low yields it hit at the beginning of the year. So, that's kind of interesting that, like, these rates didn't collapse. They fell a little bit, like 10 basis points, but, and that sort of thing. And, the long-term bond, like the TLT right now, is up a little bit today, but you can see it's just kind of like, so is it basing again? I don't know, right? And really, this debt really is not going to hit till the summer into the fall. So we really won't know for a few months now. And even though I talked about how this could potentially derail the markets, I haven't gone short. I own a couple very small shorts. One I just did myself. I didn't put it in the letter. It was just something I wanted to do as a trade for myself. And I'm up a couple percent on it. And then the other is something that I have as a small hedge, but I'm still basically long. Obviously we're just right out coming off the top for the market today with this small sell off today. So anyhow, I'm going to leave it on that note because I want this to be short, because I think this interview I did with Palisade Radio is really worth a long listen. So give it a thumbs up, a like. I don't do that actually on this. Remember, on my videos, if you could help me out, because it's all about the YouTube algorithm and stuff. And I noticed my views are slowly climbing. I take this page. Basically, I was not active on YouTube for years and years and years. So I've taken this page from whatever, 100 subscribers to, almost 500 now. I'm hoping that in the next year or two, I can get this up to like 5,000 and get 1,000 or 2,000 views every video. Not when I started, I was getting like 100, 200 views. Now I'm getting, I noticed, between 200 and 600. So it's already starting to build, and I'm hoping that we can really build this. I'm going to really be aggressive with trying to get some more advertisers on here. And just because the advertisers mean I can pump money into advertising and continue to build the channel. And of course, if you subscribe to the channel, like the video, etc., that always helps. And it doesn't cost you anything. So it's the best of it all. So yeah, today's stock chart of the day is, the Fed was dovish. But why were they dovish? Were they dovish because they know this debt is going to hit this market? No one's talking about that, right? But it doesn't really had a really huge move on interest rates. We saw some risk on assets rally. We saw gold and silver kind of bounce and then come back. I'm going to talk about this weekend. My stock chart of the day is going to be actually on the Swiss franc, because the Swiss were the first Western central bank to kind of cut interest rates. So that's kind of interesting. They're probably ahead of the curve with that. And I think the Swiss franc selling off probably hurt gold and silver. And I'll explain why this weekend. And we're going to talk about the cannabis stocks. Last year I talked about them potentially seeing a major bottom and There's now talk of legalization going on. So we'll talk about those probably early next week. So everybody take care. Have a great weekend. I will have a chart on the weekend. And yeah, watch my Palisade interview, which on my website, addictedtoprofits.net. At some point, I'm going to move everything over to stockchartoftheday.com. But there, I'll probably do that more like I'm thinking late April, because there's a bunch of things I want to do beforehand. So yeah, anyhow, I'll have the Palisade interview linked before. And I hope everybody has a great weekend, great Friday night. I'm doing this about 3 p.m. on Friday because I was doing the finishing touches actually on that financial intelligence report interview. So everybody take care, and I hope you're all doing well.